Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is March the 4th, and we have Brent crude oil trading just keeping its head above $71 a barrel, falling again this morning in early Asian trade after a significant drop yesterday on the somewhat surprising news that OPEC Plus was indeed going to proceed with its plans on April 1st to start to raise oil output for the first time in, geez, I don't know how long. It's been a while since OPEC's actually officially increased its production quotas, although it announced it last year with a very granular detail of intentions to do so. It, on a number of occasions, went to the edge of the cliff and stepped back because the market conditions were not ripe for such a move. Now, in March 2025, the market conditions, well, they look attractive to put oil barrels back on the market. I'm not sure. Let's kick off this morning with Henning Bloystein, Head of Energy, Climate and Resources at the Eurasia Group. There's a lot to get into this morning, Ukraine, all of the above. But Henning, let's start off with the OPEC decision. You have to say a surprise for the market.
Yeah, although I don't think, I mean, as you said, it had been kind of announced. Also, you said that they'd pulled back on previous announcement many times. At the risk of looking a little bit smug, we did actually say that ahead of the announcement yesterday that they would go ahead. We think that the signs were there, and it's a very gradual increase. I mean, you can see that in the market reaction this morning and late yesterday. Yes, prices dropped, but they didn't, tumble. So I think a lot of people who are actually trading in the market were maybe modestly surprised, but not totally shocked. I think the issue here is that OPEC, I mean, it's been, as you said, so long that they've continuously lost market share to other players, especially in the United States. And they didn't get the high oil price that they were hoping to get from withholding supply. So at some point, something had to give. And because the forward curve remains in backwardation, we think this is probably a moment where they said, all right, we're going to have to sort of gradually add barrels back into the market and hope things don't go too bad. So I think this is what's going to continue in the next couple of months. They're not going to open the floodgates. They're going to sort of drizzle oil back into the market.
Henning, just to follow up on that, obviously Eurasia Group, one of the formative geopolitical analysts in the world, it's not lost on me that only a few weeks ago, the three biggest oil producers in the world, Saudi Arabia, Russia, and the United States, met in Riyadh to engage on all things Ukraine. But it's hard to imagine that other things weren't on the table. My question ultimately is this decision as much geopolitics playing into this sort of trend across the world of make Trump happy? Your thoughts of the intersection point of this decision, geopolitics and make Trump happy, that seems to be the strategy all over.
Yeah, I mean, I wasn't in Saudi Arabia a couple of weeks ago, but definitely the case that there's geopolitics involved in this, and I'm not just saying this is a geopolitical wonk. It's pretty clear that the Saudis were waiting with their supply policy until they had a clearer picture of what incoming President Trump would be doing. That's why they didn't do anything at the end of 2024. They waited until now. They had talks with Trump in Saudi Arabia, bilaterally in other places as well, to see like what is he up to with regards to Iran, what is he up to with regards to domestic production policy in the US, and what is he up to with regards to Russia and Ukraine. And I think we're starting to see the results in terms of oil policy, but also in terms of how things are actually going in Ukraine as well, of course, with today, the US has just announced that they're going to cease all
Yes, let's
and all
come
aid.
back to that. Dr. Charles Elinas, CEO of Cyprus Natural Hydrocarbons Company and a senior fellow at Global Energy Center at the Atlantic Council. Dr. Charles, as Henning pointed out, market reaction was significant yesterday, but maybe not off a cliff. The caveat in all of this, of course, as we said earlier, we've been up to the edge of the cliff a number of times over the last year. These OPEC Plus has and chose not to jump, and on this occasion they have, but with the ultimate caveat that at any time they can pull back from it, because of course this is like slicing cheese. They've just sliced the first piece of the thin cheese. Your your thoughts on how successful this will be, allowing them to continue to slice that cheese every month, or will they, as they've done in the past, be compelled to reverse gear because the market cannot absorb these extra barrels? Your thoughts?
I think it could be successful. I mean, the fact that they are going to go about it gradually and not in one go, and the factor you mentioned earlier on, geopolitics, I think they are counting on sanctions on Iran and Venezuela being harsher. And as the sanctions kick in and oil is taken out of the market, OPEC will be able to release some of its own oil to replace it. So I think it's a balance between all of these factors. And the fact that the US, Russia, and OPEC, Saudi Arabia, seem to be cooperating now more than before. So there is a concerted effort to, as you said, to keep them happy by bringing prices down. The effect of sanctions on Iran and Venezuela could have been prices up. Now that is being negated by this announcement by OPEC. And I think that's probably behind what is happening behind the scenes.
Let's welcome Mark Howson, head of Asia at Wellington's Analytics. Of course, Mark, one of the formative LNG analysts in Asia. And it's always very useful, Mark, to get a sense of, because one of the critical pillars, of course, in the oil markets is where is the health of the Chinese economy? Where is the Chinese economy going? We have the China National People's Congress meeting this week to map out the Chinese economic pathway for the year ahead. One of the things that is some kind of an indicator there is their appetite and consumption of gas and LNG in particular. Can you give us an update of where that looks? It generally appears to be weaker than normal, weaker than expected LNG demand in Asia at the moment. What's the outlook?
That's right, Sean. I mean, we had a particularly tight year last year in the market, and that was very much driven in particular by China, but also India. So we had prices for LNG in Asia starting off at $11 per MMBTU at the beginning of 2024. By the time we got to the end of the year, they were up at $15. And that was very much underpinned by China, who grew their LNG imports by around about 10%. Now, some of that was obviously increased gas and LNG penetration into the transportation sector in particular, offsetting oil usage for environmental reasons, but also a lot of it was just latent demand growth, particularly in the kind of first quarter of 2024 when prices were reasonable, still in the low teens, which China saw as an opportunity to gobble up cargoes. Obviously, at the start of this year, we started with $15 per MMBTU spot prices here in Asia. The market had really tightened up, and that's why we've seen Chinese demand fall away in the first couple of months of this year. And last month, it was actually only 4.5 million tons of LNG, which actually put it behind Japan to become the second largest importer in the world. So weaker start to Chinese gas and LNG demand than we were expecting because the market has tightened up a bit. So it's just become more expensive for them.
And on that point, Mark, I mean, just to get a sense of, as you said, a lot of the heavy transport industry in China has moved to LNG fuel as compared to diesel, typically historically. But also we're seeing coal continue to grow in China as a power generation. My question is to you, how vulnerable is gas to being displaced in China, switched out for cheaper diesel, cheaper coal, as we see these tight markets elevate the LNG price?
It is certainly a risk, particularly at the moment, because the Chinese coal market is actually particularly well supplied, particularly from their own domestic production, but also imports as well. So that certainly is a risk, Sean. But in particular, there are other factors as well, and I'd say it's more the state of the global market and how China sees that price differential between gas and coal that drives their decisions as to which one to maximize.
Henning, let's move into this other space. Of course, it's been an incredible few days in the context of Europe, United States, the Western Alliance, if you want, had a big fracture moment on Friday, very classically saw by the world in the Oval Office, and the sort of dominoes falling since then. This is not, I mean, the sort of crack in the Western alliance has been signaled for a while. And most notably, you'd say perhaps is it a week ago? I mean, time is weird at the moment. There's so much dropping every day. It feels like a year and a week. But the UN Security Council resolution last week, where the Americans went along with the Russians and the North Koreans and whoever else. So this fracture is not new. But my question to you, Henning, is how serious is it? How serious is the decision today? Do you think the announcement that Trump will cut off aid to Ukraine or suspend? The language is always a bit fudgy, but give us your sense of where things are at in that Western alliance and the sort of position vis-a-vis Ukraine ceasefire.
I mean, the rift is very, very deep. Maybe I mean, never say irreversibly deep, but it's hard to imagine an easy way out of this where the United States and Europe and Ukraine can say, all right, we'll do this together again now. That's a lot of trust has been broken. Now, as you say, Trump always uses language that allows him a backdoor to dial back. So he has only suspended aid to Ukraine. Zelensky yesterday and over the weekend when he was in London was saying that the minerals deal, from his point of view, he'd be ready to sign it. So it is still possible that Trump says, all right, let's have someone else sign this. I don't need to meet with this guy anymore. And things go ahead. If he then can say that, hey, look, it's the Europeans who are paying for all the defense and putting the boots on the ground or near the ground, and doing all this, and we don't have to do anything as Americans. This is what I've always said. I wanted the Europeans to step up. So it is still a chance that things can improve from where we are now, but we've fallen pretty far.
When we say suspend aid, I mean, it sounds like you're delivering meals to homeless people. What exactly are we talking about? Because my understanding is that 90% of the quote unquote aid from the US to Ukraine is actually sent to Texas to pay for weapons. Like, it never leaves America. And the weapons then go to Ukraine and they use them in their war. What exactly does this mean? And is it imminent, like today, the weapons stop flying? Or what exactly does it mean?
Yeah, I mean, it's a good point to make. It's unclear, but what it does probably mean is, so there is, for instance, ammunition that is supplied from the United States, mostly into Poland, and then from Poland into Ukraine. And if that is literally suspended immediately, that would have an impact. However, we have talked to military analysts, and they say Ukraine, in terms of material, be it weapons and ammunition, is probably well supplied through this spring. Their biggest problem is now manpower, but so imminently this won't lead to a collapse in the front. But of course, I mean, the United States is, in terms of pure military aid, still the biggest supplier to Ukraine. And if that is suspended wholesale now, that is a huge problem. The biggest one is if Starlink, the communication system that's run by Elon Musk, is suspended, then the Ukrainians will be in big trouble, and we just don't know whether that's actually been suspended or not. At this stage, we don't think, but it's early in the morning.
Yeah, there was a great interview on FT podcast over the weekend or late last week on the manufacturing of drones in Ukraine, that they're actually making them out of cardboard so they won't be detected by the radars of the Russian radars for $500, and they can take out a tank. But fundamentally, as you point out, Henning, they rely on the internet in order to drive those coordinates. Dr. Charles, it seems to me that the least person or entity here, although it's very much the most on many levels, is Ukraine, or at the vulnerable end of this breakdown in the Western alliance. But I would see this as a major breakdown for much greater consequences for Europe. Their security protection has just been pulled from under their feet. And you'd have to say for the United States, 50-60% of the population and its political bodies who support the Western Alliance and NATO and all these things, this looks and feels like a transformational move of one man aligning with another man, and the West of the West is left out in the wind naked. Your thoughts of where the dominoes fall on this? How serious do you grade this to be, and where do we go from here?
Well, I think it's going to be very serious for Europe. The meeting in London during the weekend of the European leaders appeared to, on the surface of it, come to a sort of agreement, but there was no substance to it. They didn't commit anything. They didn't commit any people on the ground or any money. And the news now is that the $20 billion Europe earmarked for Ukraine is now in doubt. So in response to the announcement by Trump, Europe should have not only supported the 30 billion, but increased it. It's gone exactly the other way around. So that 20 billion will not be available to Ukraine. And Europe, I think, is at the receiving end. There is also a concern that tonight, when the Trump addresses the joint meeting of Congress, he may announce pulling out of NATO. And he may also follow the sanctions on Canada, Mexico, and China with sanctions on Europe. I mean, these are momentous events, and we don't know. I mean, the whole thing is happening at such a fast rate and with such unpredictability. It's difficult to know, but it's not unthinkable that within days, following the announcement on Ukraine and the announcement on sanctions on Mexico, Canada, and China, he may announce tariffs. I keep saying sanctions, tariffs on Europe.
Well, I think that's definitely going to happen. He said it a number of times, and the question of when you look to last week, so much, as I said, happened in a week, but we had Macron, Keir Starmer, and then Zelensky visit Washington in the Oval Office, and Keir Starmer was congratulated on his amazing diplomatic efforts or diplomatic skills, but ultimately he went down on the knee and kissed both rings and both toes. And you look at what Zelensky did; he stood his ground. You think, from a Europe point of view, is there still a ring to be kissed here and get results, or is Zelensky's posture actually the most appropriate for Europe now to follow? They've got to stand tall. Your thoughts?
Europe is going to find it difficult to stand up to Trump. There is no unity within Europe. They're trying to demonstrate unity. There is no unity. The leadership is lacking. There is no leadership either. I think it will come in the end. It will come down to Zelensky backing off. And as you said before, Trump has kept the door open for that to happen, and I think that is going to be the way forward. Europe is increasingly finding itself in a position where it says the words but cannot walk them.
Yes. Mark Howson, again, looking at the ramification of all these decisions on the gas, I wanted to, with the lower oil price, Mark, obviously we have LNG indexed to oil in a lot of contracts. Of course, it's also in the spot market. Can you talk to us a little bit about that dynamic? As the oil price declines, the LNG price declines with it in those index prices versus the spot market. What's the sort of tensions between those two and the ramifications of it?
Yeah, we can certainly touch on that, Sean. I think the other point I wanted to make was in relation to your point about the geopolitics and the impact of Trump on the oil business. Now, on the gas business, the impact's a little bit more delayed because, of course, we don't have a big swing supplier like Saudi Arabia in the gas business. But what we certainly see, speaking to our clients, is a lot more interest in particularly Japanese LNG buyers buying into US LNG export projects, and quite frankly, projects that have been in hibernation for several decades, like Alaska LNG, which obviously has been trying to get off the ground for 20 years plus. Now we do see, in order to, in a way, help Trump in terms of eradicating Japan's trade surplus with the US. We see serious potential investment, particularly from companies like Mitsui and Mitsubishi, in trying to monetize that gas, investing in the US, increasing gas adoption within Alaska, and then obviously bringing export revenues in to the US by taking that LNG, which of course is the right side of the Panama Canal. It doesn't have the bottleneck, and it is a disconnected gas market to the rest of the lower 48. So it can be contracted, not
that's an
necessarily on a
interesting.
Henry Hub link basis.
That's
So more
an
investment
interesting
going
point.
into the
Is
US.
that investment, because there's a lot of sense that the investment needed for these LNG projects that have been queuing up over the recent years, paused by Biden in his last year, but that the activation of those that haven't already reached FID phase is a big question mark on them, given the financing involved.
Correct. And the other problem, certainly last year, was that the buyers didn't want to increase exposure to the US, because by the time we get to 2030, almost 50% of all LNG supplies just from the US and Qatar. But given the geopolitics, there's big pressure on the Asian buyers now to increase their investments in the US. So we spoke about Alaska, but it's also on the US Gulf Coast. I don't know if you know the Woodside Energy Louisiana LNG proposed project, which is still hoping to take FID this month. And there are two Japanese buyers in particular that are very closely looking to farm into that project and take it over the line in terms of final investment decision. So yeah, the US LNG sector is rejuvenated.
Would they have to, is part of that going back to the old model of long-term commitments, the old model of 20, 25 years? We've seen in recent years the LNG deals that were done in Europe, for example, with Germany in recent years, they've been like 5 to 7. The renegotiation of the Middle East contracts with Asia have been kind of a mix of spot and shorter term. Where does to get these projects in America moving again, will they require that longer term 2025, or what are your thoughts on that?
Yes, for the financing and also for the Asian buyers' energy security purposes, Sean, they will have 20-year contracts attached to them. But the nice thing with the US LNG is it is destination flexible. So if demand in Japan is weaker than expected because the nuclear plants come back, the Japanese buyers can divert those cargoes to Europe with no problem at all, for example. And the other factor in the market, particularly from Qatar, is last year and also in 2023, there were actually 27-year contracts signed into Europe and also into Asia, just because the market had tightened up. And after Russia, Ukraine, of course, energy security very much came to the fore again. So a real mixture of short and long-term deals at the moment.
Let's go to the survey question, which is touching on the OPEC Plus decision to proceed with their increases from April 1st. Will OPEC Plus be compelled to reverse plans to raise output April 1st as Brent crude oil falls below $70 a barrel through March? Now, we've seen the price come off yesterday, obviously, on this news, but this has been an oil price that has been declining for some time. It popped above 80 in January based on expectations that Trump's arrival and different things may trigger supply risk. But ultimately, since then, mid-January, it's been a steady downward down the staircase. And yesterday's decision was another extra wind in the sails of the bearish outlook. Your thoughts, will OPEC Plus be compelled to reverse these plans because Brent crude cannot hold above 70 on these announcements, and so through March and reverse for April? Let's vote on that one. Henning, of course, there are a number of other issues in the world that are not looking at the risk that was mentioned earlier. We've talked about, obviously, the OPEC decision, the Ukraine Ukraine conflict settling in some way, however it gets there, but also that this decision by OPEC Plus may be built on a sandcastle of maximum pressure on Iran and on Venezuela, but Iran in particular. Your thoughts, Henning, on this occasion as we come deeper into Trump 2.0, the ability to put the big squeeze on Iran again and knock out over 1 million plus barrels of oil a day of exports that it's currently delivering mainly to China?
Yeah, I mean, it seems a little bit at the moment that sort of the Middle East and Ukraine sort of take turns in which is in the spotlight at the moment. It's Ukraine. It could become Iran very fast again. We're pretty sure that Israel has very advanced plans on striking Iran. We do know that Iran has enriched a lot of uranium, so there is huge potential for escalation in Iran. There's previously moderate politicians within Iran's government have resigned or been pushed aside recently, including this week. So there's a lot of risk continuing here. There's also, of course, in terms of pure barrels, as you said, Sean, the chance that the United States will try and push out as many barrels out of Iran through tightening of sanctions as possible. And then it stays like that. So, but the problem is we don't really know, and this is a great cause for concern. And it's the same back in Ukraine. We don't really know. I'm a little bit more optimistic than Dr. Linas on the European response, but it doesn't. Even if the best response possible happens there, it doesn't mean that the conflict gets resolved in any form of stability. So unfortunately, we fear that the situation in the Middle East and in Ukraine remain very unstable. And that will probably impact oil in some ways. Although at the moment we're in the camp of the bears, so we think oil prices of $60 per barrel are more likely than 80.
Dr. Charles, looking at the other story over the weekend, speaking of geopolitics, that, on any other day of the week would have been a headline story everywhere, and that was the ceasefire in Turkey agreed between the PKK and the Turkish government that's been ongoing insurgency in Turkey for 40 years, and the leader, Öcalan, and secured a ceasefire. What does that mean? Obviously significant within Turkey. Is there regional ramifications for that? Your thoughts?
I think it is definitely significant within Turkey. It's a major move. I mean, for Öcalan to come and make that statement for me it was unexpected. But I think it will have also ramifications on Syria. Turkey is trying to sort out the Syrian situation. And obviously, the Kurds in Syria play a major role, and that will definitely have ramifications on Syria, and also, as you know, the Iraqis are in negotiations to allow oil to come from Kurdistan back to Ceyhan. All of these things are related. I think Turkey, Erdogan has decided to take the PKK factor out of the equation in the region, not just in Turkey. And for him to make a move like this publicly and without losing face, it implies to me that he has already some agreements behind the scenes, that there is going to be a lasting ceasefire and maybe a solution of the problem between PKK and Turkey. For the region, that would be a major development, especially in the rehabilitating Syria.
And just on the back of that, of course, the potential for energy to flow across that region. There's been dreams for many years of pipelines crossing Syria into Turkey to Europe. Obviously, we've just had the announcement of the restarting of the pipeline from Kurdistan in northern Iraq to Turkey, 400,000 barrels a day, and there's also 400,000 barrels a day of oil production potential to be rehabilitated in northeastern Syria, of the Kurdish region. So there's a lot to play for if the Kurdish issue calms down with the Turks, etc. So a page to watch. Nothing going to happen this week, but ultimately something to keep an eye on. Last word to you, Mark. I wanted to get your thoughts of a big topic of conversation last week in IE Week in London was, would the Europeans re-engage Russian pipeline gas from Russia to Europe as this sort of ceasefire deal, whatever it's going to be at the end of the day, but ultimately the restarting of pipe gas from Russia to Europe. I'm not asking you to sort of give us your thoughts on whether it will happen or not, but if it did happen, what impact would that have on some of these massive LNG plans that you just talked about?
Well, if that did go ahead, Sean, there oversupply in the LNG business that we are expecting in the next couple of years as the liquefaction capacity grows by 50% out to 2030, that will become exacerbated, of course, because there are quite bullish forecasts of European LNG demand based on Germany using more of their import infrastructure. So if we do see that increase in Russian pipe volumes, we will see those European gas storage levels creep back up again, and it'll just exemplify this oversupply we could see in the next couple of years. But obviously a lot of geopolitics to play out before then.
Yeah, there's a lot. But also, I think for anybody looking to put $10 billion into an FID project in America, it's something they will be keeping their eye on. Big story in the FT over the weekend about the rehabilitation of Nord Stream 2 pipeline, gas pipeline from Russia to Germany. LNG investors will be keeping close watch on those developments. We have to wrap it up there. Brent crude oil just keeping its nose above $71 a barrel, but down 0.75% in early trade this morning. Let's see where it goes as Europe and America wakes up to digest what has been a very busy overnight of news. 50-50 view here in this room about the impact that will OPEC Plus have to reverse. Let's see as we post that on social media what the wider world thinks. Mark, thank you so much as always. Great to have you back on and doing amazing work there at Wellingens. Really impressive. Henning Gloystein, Eurasia Group, and Dr. Charles Elinas, the Global Energy Center, Atlantic Council. Thank you guys for all your contributions today. Have a great rest of the week. We'll catch you all soon. Ramadan Kareem.
Thank you.
Thanks, Sean.